Hello, welcome again to the same question. Actually, in the previous video, we just did section A, that when you are just trying to ascertain the contract, but you have the profit, you have the overall profit. Now we have situation B. You are given the contract, you have the contract price at $8,000, just like that. You have cost incurred today $2,000, and then you have estimated cost to complete the contract that is 3,000. And we are told that progress is based on the cost incurred to date as a percentage of total expected costs, just like this. Now let's go to part B. Suppose the business cannot reliably estimate the outcome of the contract. Suppose it was this way. The business could not reliably estimate the outcome of the contract, what should be recognized for revenue, cost, as well as profit in the statement of profit or loss. What would you do in this situation? You cannot be reasonably actually estimate the outcome, so you cannot even use this progress, because this situation here is used when you are certain that of what you are doing. But if you're not certain of what you are doing, as we said earlier, you would have actually to recover. You would have to take cost incurred to date, but as for cost of sales, but actually you'd have to use cost incurred to date for the period. And then as for revenue, you would have actually to just recover. You just have to recognize revenue at the amount that you can recover for your contract. So if you go to our question here, that is part B, this is what I would have to do. So we say there is no reliable estimate of the output of the contract. If there is no reliable estimate, that means you cannot estimate that 40% that we initially did. So this is what we would have to do. We say that revenue is recorded at just to recover cost incurred in the period. So you have to recognize revenue at the cost you can recover. So from the question, we are told that cost incurred for the period were 2,000. Actually, that it was cost incurred to date, but since it was the beginning of the period here, we are told that it was the beginning of the period here. Yeah. We are told that it was in the first year here. It's the first year. So if it's the first year, that means all the costs have been incurred during that year. So you would have the cost of sales at 2,000, and actually you would have to recognize revenue at the cost that you can recover. If you're not told anything, we presume that we can at least recover our cost that you have incurred, that is 2,000. So you'd have your revenue 2,000, giving you a profit of nil here. So you have to be very careful when you meet something like that. All right, and now let's go to the last point here. C. Suppose the contract price, or maybe we can just do this in the next slide. Let's just go for this in the next slide. It becomes much simpler.